Good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, January 24th. Michael Boutros here with you this morning. So the dollar slaughter fest continues. Dollar breaking some major levels today. We're seeing that across the board pretty much. Even the Aussie and Kiwi that we highlighted last night that were trading at resistance have pushed higher. Dollar Swiss played out very well. That broke the opening range for the week that we highlighted yesterday, continuing to move below support. Dollar yen way below support at this point. So we got a lot to cover. On the docket, DXY, Aussie, Kiwi, Dollar Swiss, Pound Oz, Pound CAD, which is still stretching through that resistance, but Pound Oz is really the play there. Euro dollar, pound dollar, dollar yen, dollar CAD, and crude. Of course, despite all the dollar losses that we're seeing, prices in that are still just testing and holding that major critical resistance level just above 64. So if that does break out, look for further upside there. As of now, we're still holding below. That's what's on my list for today. If you heard something or didn't hear something rather that you wanted to cover, feel free to throw it in the message board at any time, alongside any questions you might have. So let's jump right in. We'll start off with the DXYs, which is what we've been following. Jay moves right on with this one. We were debating this for a while. The weekly chart had us into a big support zone. 89.62 is the next level down into 2009 highs that you see right there. Really nothing until 80, what is that? 88.71, 88.79 is your next downside sort of key resistance on, or key support on the weekly charts. Here was the median line that we were riding until yesterday, and then we broke. We didn't even close below, okay? And then there was the reversal play right back lower. 89.55 has been taken out already. So again, the risk here is all the way down here now for the index if we close at these levels. Again, I'm sorry to be a little bit more on the cautionary side here, but if you're not already short, guys, on the dollar, I really be mindful of trying to chase this. If we get a decent rebound in intraday play, sure, on an intraday type of position, I'm more than open to that kind of play. But at the end of the day, these runners, they're going to keep going. So if you're holding any decent positioning on the short side of the dollar, I would be holding on, maybe slicing off a little bit every time we get to the next target, but you don't want to try to catch a falling knife on this. Pete says SPX. Yeah, we could take a look at the SPX. See no imminent risk just yet. We'll look at the weekly and daily charts in just a moment. Sure, Pete. Let me write that down for Pete here. But as far as the DXY is concerned, again, here's the 240-minute chart. 89.92 sort of the last-ditch effort, which converged on support here. We bounced a little bit, but it's been a straight shot lower. So we're just trading below the 89.55 handle right now. Here's what the intraday chart looks like. Again, downside break of a descending channel. See this light channel highlighted here, a parallel off those lows. Caught that. Make your own assumptions. This looks like a break to me, especially if we push lower into the U.S. trade session. 88.27 is the next downside target for the dollar index. Risk is there. Momentum is in oversold territory, both on the intraday and daily charts. Again, if we bring up the weekly charts, just probing below intraday, the oversold condition. So the weekly close will be important. Again, that 2009 high that we were looking at would be a sort of a decent pivot if we were to close back above that, but we already went over the extent of which a 5-week decline, guys. This thing is continuing to stretch just crazy lower. So instead of trying to fight this just yet, if you're holding on to positioning, still looks pretty good. Questions on the dollar sell-off, the massacre here. So despite these dollar losses that you were seeing yesterday, even into the close of the session, the Aussie and the Kiwi were the most resilient, or I guess the dollar stayed the most resilient versus, or the Aussie stayed resilient versus most of those, because you couldn't see the Aussie really break lower just yet. It continued to hold just below resistance. Here's what Aussie looked like last night. So we talked about this in the webinar yesterday. Took another stab at the short side. We were at break even again. So, a quarter of the trade got taken off, but again, we got stopped at break even. We've ruptured through 80.26, 80.54, which is the high day close from last year. And beyond that, guys, 81 is really what we're looking for on Aussie. We're trading somewhere around 80.70 right now, just higher. But this channel continued to hold pretty textbook, right? Nothing really was concerning. We highlighted that it was a very, very clean opening range right above slope support. So if we broke through the highs, not only is it the monthly highs, but it's also the objective weekly opening range high. So once that broke 80.54, and again, the upper slope here is what you should be looking at as a target, but 81, if we go back, has been a decent pivot in price. I'll show you that in a moment. That was sort of the game plan. I was favoring that we continue to break lower for correction towards 79, essentially, 78, 80, 98. But the market doesn't care what I think, right? So at the end of the day, the weekly opening range broke to the upside. That took out any shorts that we had, and if you were quick enough, there was a decent entry to try to chase it. But obviously that was late night here in the U.S., so I didn't get a piece of that. Here's what Aussie looked like currently. If my Aussie chart wants to load, there it is. So the high day close from last year, 80.54. We've taken that out. Here's the stretch higher. So 81, converges basically into the close of U.S. trade today on the upper parallel. If we go back far enough in price, that's just a former swing high from the late September advance there. And then obviously the concerted yearly swing high comes in at 81.25, and that's the 2017 high. Now, ahead of schedule as far as you can see, but the daily chart's highlighting that we remain in overbought condition. That slope line that you see there in red is extending off the high that you made in 2013, again in 2014. That still gives you a little bit more room as well, just above the 2017 highs. But if we were to close at these levels, you can't fight this. You can't fight this. So the problem becomes from a trading standpoint. Do we, on an intraday basis, really near term, do we continue to favor the long side, or do we try to fade? It's way too early to fade. We took shots all across the board on Aussie. Definitely, no harm, no foul on the loss. But as far as trying to get any traction on any type of recovery, haven't gotten it. So at this point, let this thing run if you have it. If you don't have it, we have to wait on the sidelines until we get some sort of tell that there's going to be some sort of relent in the dollar losses. It's pretty ridiculous. Here's the interesting thing is that you're seeing yields continue to move higher. So, that correlation breakdown. Here's even the intraday chart, even that descending slope, the divergence that we were noting all up into these highs. One of the other reasons that we were looking for the pullback, very short-lived. Again, that was going to be our bullish invalidation level. We're going to keep that still the bullish invalidation level, but upslope on the upside here. The basic channel resistance, okay, you have 3 touches on the downside, 3 touches on the upside, converges on that 81 handle, basically late into the close of U.S. trade today. Any questions on Aussie or where we stand here at this point? Still, the big player as far as U.S. economic data is concerned comes towards the end of the week with the core personal consumption expenditure, the Fed's gauge on inflation, as well as fourth quarter GDP figures. So also commentary by President Trump at Davos is certain to catch market attention. Certainly a lot of the headlines that have been coming out regarding new tariffs that are being implemented. Some of this stuff may filter in and give you a little bit of a gyration in markets. So we'll be looking for any of that commentary. But really, Friday still remains the big player as far as event risk is concerned on the crosses. Any questions on Aussie? Looking for the stretch a little bit higher, at least towards 80, 89. So 80, 90 to the 81 handle, that 10 pip range. Look for a target there on the upside for this immediate slope. Okay, and that is Aussie number 2 on this session. So Kiwi had a very similar stance, although I wasn't really as confident trying to even play near-term weakness in Kiwi just because it was so resilient. Here's what Kiwi dollar looked like. This thing had pushed through the 200 day moving average. Excuse me, this is the 200 week moving average, long-term moving average. We were testing a 764 retracement, yeah, but momentum was well above 60 already, and it wasn't quite as convincing as me to try to play as much as the Aussie. 73.75, which we hadn't hit yesterday, was a level which I was looking for some sort of reaction. Okay, because based on the slope that we've been following since basically the highs in 2016, the upper parallel basically converged right in that region too. So from the intraday chart, though, you could see that 73.75 again hadn't been hit, and then the 74 handles where it started to converge on basic slope resistance. So a stretch into here was what I was looking for to possibly look to fade if we got an opportunity momentum. Here's what Kiwi looks like right now. Okay, it's just popping right into that region. So am I still looking for the possible fade? Sure. Is it something that I'm willing to take a trade on just yet? Absolutely not. I would need to see some sort of mean reversion off of that level, like a strong reaction to try to fade this. Otherwise, based on the daily chart, if we were to close at these levels, that's just a basic breakout. You're looking for further upside towards 75, 74.50, 74.80, 75.15, next three topside objectives if we push through basic slope resistance here on the near term. Here's the 240-minute chart. So remember, we initially broke to the upside of this descending slope that shifted the focus higher. Started to get a little cautious here, but the breach of the upslope, sharpest part of the rally, we tested it as from resistance as support, then it just ripped, and it's been on an assault ever since. If we're going to see some sort of pause, here's where we would be. Again, you would want to fade that pullback, still looking for that stretch towards 74.50, 75.15. Next upside targets on Kiwi. Any questions on any of these trades? Again, cautionary note to start chasing these. Again, Aussie on the weekly. If we close above last week's high week close, high day close, suggest still a bigger move. Okay, Kiwi dollar on the weekly. At this point, again, there's really nothing until 75.16. That's the one that shows up on all three charts: weekly, daily, intraday. It's also pretty damn close to the 75.12 level, which was last year's high week close. So that's your next big region. But it's been tough, guys. It's been tough to try to get into these trades. Look the magnitude. This is what 7 weeks of consecutive upside advance of almost 9%, basically since the December low. It's pretty radical. Pretty radical. So point being, don't get cute just yet trying to call any more highs on these or trying to fade these moves as they are deep in play at this point. Okay, so that's Kiwi. Any questions on New Zealand dollar? So no change to any of those levels. We're basically testing slope resistance, 74 handle right now. See what happens here into the close of US trade. If we get a decent pullback back below 73.75, that might be something, but at the end of the day, there's got room to stretch here. Last but not least, Swissy was highlighted last night. This thing had made a break of the weekly opening range. It looks like it was breaking to the downside after resistance, holding here at slope resistance. So remember, we were looking for, if we broke higher, for a short position off of one of these two levels to continue to move lower. This was obviously a very, very nice support confluence. You had a 786 retracement, the lower median line parallel, basic slope support. This is a parallel off the highs here. So a really clean setup. And again, we opened the week right below the median line. That was the opening range for the week. The break to the downside shifted this lower. So now the drop is getting a little bit more precipitous and starting to pick up a little bit more steam. Here's what it looks like. First of all, the daily chart. Again, that confluence region 95.53, which is what shifted the focus for a rebound. That median line on the intraday chart holding, downside break, taking us through descending channel support and descending slope support. 786 retracement, and again, typically you'll see a sharp move here I think that's what you're seeing on this eminent drop. I still think you have room to 94.86. Here's what it looks like on the intraday charts. 94.86 is going to be a basic 1618 extension from the decline off of the highs that we made late last year. So here's the reference points. Okay, what is that, November, December low, and subsequent high that we made in December. That extension gives you a 1618 right here, 94.88. Beyond that, you're just looking for these former swing lows here from 2017's July. Probe through it again in August, and you probe through it again in September, but initial target would be 94.38. And this could pick up even more steam. If the US market opens and the 4-hour candle starts to close here, this could pick up pretty quick steam. Again, objective weekly opening range, boom, boom, boom. Break keeps you bearish. Now, bearish invalidation lowered from 97.28, where we were at the start of the week. That gets lowered all the way down to 95.90 at this point. So as long as price stays below that, you want to continue favoring short side. 94.88, 94.38, next downside targets. Questions on Swissy? That is number 4. Okay, so we've been covering a lot of sterling crosses, sterling AUD, sterling CAD, but before we go through either of those, I guess we should just cover pound real quick. That thing is just ripping to the upside as well. Recall that pound was coming into an area of interest that I thought was going to give this thing a little bit more trouble. On all different time fronts. Here's what pound looks like on the weekly. Obviously, we have to see what the weekly close looks like, but above 39.52, boy, you still have room to stretch. 200-week moving average converges right on the upper median line parallel at this point, and that's all the way up here at 144. Now, do I think we get it perhaps on this specific stretch? Maybe not, but that would be the immediate upside target. And if the weekly close does materialize above 70, that's all the juice you need. Okay, that's all the juice you need. So the analog for the dollar losses that we were looking at that Jamie's been highlighting for quite some time has actually been panning out perfectly this way. And would give us a little bit more room for dollar losses. So for pound, the room is still to the upside. Support, my humble opinion, again, constructive above 39.52 at this point. This is just from the weekly standpoint. Sterling on the intraday. And here's what sterling looked like earlier in the week. Okay. This cluster of resistance all the way into 39.43, which was last week's high. Remember, we were looking for some sort of exhaustion play here. We're getting divergence, started to look pretty decent, but we didn't even get a pullback into this basic slope support. And the break above last week's high just invalidated any type of expectation for a pullback. Here's what pound looks like. Well, I guess I'll highlight first on the daily chart. Basic parallel. The same slope we're following. This is the same one we're looking at on the weekly charts, right? A slope extending off here, that's 1 touch, that's 2 touch, that's 3 touch, probe. See what happens here. If we close today above that, again, there's nothing to stop this from going right up to 143.50, initial target. And then again, that 200-week moving average converges right on the upper parallel, 144. So the levels are clear. Again, this is one of those trades where it's a runner. So if you're in it, you're still no overbought. Everything looks all right. I'd be bringing up my stops. And maybe on the intraday, taking a little bit closer of a look, taking a little bit off near 43.56. That'd be the 786 retracement. But here's your weekly. The break above last week's high came back. We checked it even as support and moved higher. I mean, that's as clear as a break as you can get. So look, at some point before the end of the week, you're going to get an exhaustion pullback. Trying to play that on an intraday position, again, really tight on your stops or towards the swing low for this session if we get some sort of decent trigger and momentum. But, the stretch here still has room, 43.56 on the upside for sterling. And you can bring up bullish rather, invalidation to this point to those highs from last week, 39.42. And again, 39.52 is where the initial breakout was. So, dollar massacre. It's here. It is here. Don't question it till there's reason to question it. Right now, there's no reason to question it. You might see Jamie just a minute ago put out a tweet right near what the analog has been following, actually. So things look pretty decent. Watch, and again, I'm just looking at this objectively. Watch for this daily decline, okay? Whether it closes above or below that 2009 high, which comes in at 89.62. All right. Any other questions here on the dollar Swiss, Kiwi, Aussie, Sterling? Okay, so let's jump into some of the extraneous sterling crosses that we've been following. The favored one for a cross against the dollar, excluding the dollar for sterling strength was Aussie. That's because we were expecting Aussie gains to be tempered. They were tempered, but now we've broken out. So softens the upslope a little bit, but pound Aus still has continued to play pretty well within our levels. Here's what it looks like in price. So the daily chart, first thing I want to highlight is just where we are here. Pound Aus was something that we were looking at earlier in the week. Weekly chart showing us coming off of basic 50 line of the broader formation that we've been following off the 2016 lows. So 176 is like the level to look at for a first target on the weekly chart. There's plenty of room. This is a broadly an uptrend looking for 183 at some point. But sort of the broader scope of the picture. Daily chart had us breaking an objective move above the the monthly opening range. Here's your monthly open. Set a high, set a low, you test the high, really quick break of the lows rather, but a test of the high again that held. Really highlighted 74.16 into 71.20 as our key zone or key range break that we were looking for. So we highlighted this early in the week that the break materialized. We got the daily close above. You're looking for a stretch into 75.61, 76. That's what we are doing right now. We're right here. So that's sort of your first zone of interest for, okay, maybe take a little off the table of exposure here, bring your stops up. And look for the daily close. If we close below it, even a kickback towards the monthly opening range highs wouldn't be outside their own possibility. But your basic premise on this trade still looks constructive. Okay, still look constructive. So looking at this from the intraday chart, here's what it looked like again earlier in the week. Early week break of the monthly opening range. Looking for 75.47. We were talking yesterday, just as this thing was probing that region. Got a little bit of a play below it, but we're breaking higher. So now you're looking for 76, which is not on the intraday chart, but it is showing up on the daily chart as just a decent pivot. And then 76.53 would be the 618 of the decline from the highs. We've pushed over a little bit in time, but basically if we take this slope and extend it off these highs, we're basically looking at slope resistance there near term as well. Here's what it looks like on the intraday charts. So broadly speaking, it still looks constructive. 76, again, like I said, is a region you still want to do something if you're holding any long exposure here. But on this stretch, moving to 76.53 would be sort of the ideal scenario. You can bring up your near-term bullish invalidation level from earlier in the week. We had set that at 73.68. Go ahead and bring it up to 74 at this point, as long as we stay above that region. Or you know what? I take that back. Right, the objective monthly opening range highs, 74.16, just a bit higher. So this trade's a little bit more price objective, as that, it was a clear-cut range that we were holding ever since the start of the year. And we rebounded right off the 2017 open at 71.19, really nice spot of which we were looking for some support. Very nice reaction there. We were looking for the inevitable topside break. Here it is. Any questions on pound Aussie? It's number 6. Number 7 is pound CAD. I didn't really have any trades on this week yet. It's something that we were following since the start of the week, and the basic premise of this trade is that if the pound is going to pull back, this would be one that I'd be interested in playing, just because dollar CAD, we were banking on that downside break in dollar CAD, which is CAD strength. And sterling, we had a near-term resistance target, right? So for the pullback, this was the one I was looking at, especially because we were attacking the December highs that we made last year. Actually, though, let me correct that. That was the November highs that we made of last year, and December highs. And key 618 longer term retracement from the ascent off the declines that we made, or the ascent gains that we made off 2013 lows. It's a big pivot region. Didn't materialize, obviously, right? Momentum is now in overbought condition on a daily close basis. And how to attack this one is a little bit outside my realm. I don't have any game plans here. So yesterday we guesstimated channel resistance around 75.30. You want to bring that to a little higher, around 75.75 at this point. I'd keep near-term bullish invalidation at the objective weekly opening range lows. Here's your weekly open. Here's your weekly opening range low. So I'm cool with leaving that at 73, basically. But even when you look at objective price action like this on a near-term slope, I mean, look at the targets that we've been holding on this. Once we broke out, bullish invalidation was right here. We were looking for a pullback. You didn't get the pullback ever into that level to get the long. Broke right through. This was our next two topside targets. We were looking again for some sort of corrective pullback here to get long. Fizzled out super quick, then broke higher. Again, the 618, 75.30s, big region. We were talking about that on the daily charts. That's what we highlighted at the beginning of the week. We were looking for just a decent pullback into the weekly open to channel support to get long. No chance. Here's the top side break. That's just been the luck of the draw with us, at least on my side on the near term of trying to really attack this one, guys. So, be quick, be nimble, lower your leverage if you're gonna be a little bit more aggressive on the entries, but there's still no reason to really fight any of these extended play, despite the fact that these weekly exhaustion trends, which show us really stretching into pretty stretched territory just on a consecutive basis gain, doesn't necessarily mean it's going to turn. So obviously pound Aussie is still the favored move out of both of these, but keep an eye on this pound CAD position here as we attempt to break today above this cluster of resistance. Again, the daily close is necessary. A daily close below this region after probing through, that would be reason to cause concern, at least for a near-term exhaustion play. But we haven't gotten that yet. Okay, done with the pound crosses. Off with you. Next up on tag, let's take a quick look on a euro dollar. Here's what euro looks like. Here's what we were looking at earlier in the week on euro. Okay. What can we say for euro? So the game plan was to look for some sort of near-term exhaustion early in the week to play the pullback as long as we stay below last week's objective, like opening range high, basically for the month here, 22.96 it was. We tried to probe through it. Friday's high turned exactly from there. We gapped higher, pulled and covered the gap that we made in the Sunday open, but this was still the focus range. So euro, obviously, long story short, it ranged right above that median line. And here's the break. Some near-term targets that I'm looking at. 123.76 completes a 1618 extension off the decline from November. So this is taking the November lows and December lows. There's the 1618. And just higher, you have that upper median line parallel. So that gets you like 124.11, 124.12. Near-term bullish inval, you're going to go ahead and raise that to the median line, which almost converges on that same region, basically heading into tomorrow's trade session. So keep an eye on that if you were to get a pullback. but you're basically looking on the stretch 123.76. I think a little bit higher, 124.12, 124.15 would be my next sort of play for resistance on the upside. Again, a trade that's overbought now. It's trying to make a daily close today into overbought territory. Keep an eye on that. In near-term momentum, we are in overbought. So remember, we don't want to fight something that's just breaking to overbought territory. If it were to recover below, similar scenario. If we were to tag 123.76 and pull back and close below, lower on the day, that might be an opportunity. All things held constant, all things held reasonable. 22.96. As long as you stay above that, you continue to look higher. And the Aussie rip continues. Putting things in perspective on the weekly chart for Euro. We're now clearing the 2008 swing lows. A lot of room here. A lot of room here to stretch. And that is Euro number 6. Let's segue into the abomination, shall we? And then we'll hit dollar CAD and crude. And Pete wants to take a look at SPX, so we'll take a look at that. So here's what the abomination looks like. Dollar CAD, dollar yen, I might make fun of it and all, but it actually was pretty clean. The basic focus, remember, we were in a swing trade last week, taking some shorts into this region. We highlighted that there was a nice confluence region there. That was a measured objective move, again, for that consolidation that broke back on the 9th. And that measured objective target was 110.23. Just lower, you had a 618 retracement from the advance of September, and that was 110.15. So 110.15, 23 area of support converged right on the lower parallel. So yeah, that shifted my focus higher. The median line's been holding as resistance. We opened the week again highlighting resistance at the median line, and it just so happened that high, let me say this correctly, the high reversal bar, 4-hour close, came in at 111.13. And again, when we opened the week, we probed through it. It converged on the median line. Again, we failed on it yesterday. The breakdown taking the weekly open out and the weekly opening range lows out. And certainly that shifts the near-term focus objectively lower. Here's your first move back into key support. We sailed through. This was the next target, 109.86. The final target I had on any short exposure was 109.54. So if you go back to the update for dollar yen from the previous, which showed all our daily targets, 109.54 was the last one. And we're probing that now. So look, from here, again, it's the same type of trade. It's stretched. It's a pretty sizable move. Today's close is going to be important. If we convert, or if we rebound and close above 109.54, yeah, I would expect some sort of near-term corrective action. Is it worth playing? It's going to be a really hard call. It's going to be a really hard call. So, you can bring up just the next extraneous extensions and retracements. That'll give you 108.90. That'll be an objective 786 retracement. Cool. You're sort of your next downside target. But yeah, out of here too. Things get really dicey here. The downside break of a descending formation. So here's slope, support. That's off this parallel right here. That's a downside break of a descending formation. And again, this region here converges on this parallel. It's red here on the intraday charts. This is the same parallel of this, right? Off the highs of the years. Boom. Almost touched it. Converges right there. So if we were to close below this, guys, again, don't underestimate the magnitude of which this could drop. Questions on dollar yen? On the weekly, it's actually pretty clear. Objective 618 of the advance from last year's low, targeting the range lows. Very plain and simple. Very plain and simple. The weekly chart also highlights, just wanted to keep an eye on this basic trigger that we've been watching. This is just off the lows from 2016 on the weekly charts. Okay, if this materializes with a break below 110.15, with a break below that basic slope, again, further reinforces a move back into the range lows for the pair. Any questions on dollar yen? Okay, last but not least, here's number 8, dollar CAD. Here's what we look like on the, I guess we can look at all three on this one. Downside break that we're seeing here in dollar CAD is taking us to fresh lows. Okay, so last or the level that we were looking at as support since the start of the year was 123.88. That shows up on all three charts as well. So it's an objective advance of the move off of last year's low. Just lower from here, you still have room until you even start to approach that median line that we're looking at in blue. And last year's low week close, comes in at 121.56. So from the daily chart, basically those are the levels that you're looking at. Watch that slope wherever it shows up in time, 2260s, and then 121.56 would be the next objective downside target for Loonie. Now look, the opening range highs were right at the 200-week moving average. Really nice. This is an objective break of the monthly opening range. So such a scenario objectively would have us looking for a late month low in Loonie. Here's what it looks like on the daily chart. Okay. You can call this a consolidation break. You can call this a near-term range break. For me, it is the opening range break. Here's your yearly open. We came into support confluence that we highlighted. The 618 Fibonacci considerations never, invalidated on a daily close basis. In fact, every rebound was pretty sizable. And here, if we close again today, validates the monthly opening range break, looking for the late month low in dollar CAD. So the focus remains lower. There's that slope I was talking to you about on the weekly charts. Again, that comes in, near 2270 here. It shows up a little bit in time. Again, that's more accurate than the weekly chart. So around 2270s, and then 2244 is a basic 786 retracement of that same advance. So the 618 gave it some reason to pay attention. The 786 retracement, we should probably pay attention to again as 2244, 2245. Here's what it looks like on the intraday chart. Even from a weekly standpoint, weekly open, set a Monday, Tuesday high. There's the break. Look for a late week low. 2245 is where I would like to see at least a stretch on this move. Give me a second. I just want to see what this looks like. Okay, so the 618 extension of that decline actually converges right on that 786. So it even further highlights 2241, 2244. Look at that. Dead on. Keep an eye on that. Near-term bearish invalidation. I'll just leave that with the weekly opening range highs. Next downside target right here. So the Loonie strength dollar CAD breakdown continues. Where does that put us? Again, in oversold even here on the intraday. Where does that put us on crude prices? Well, crude's been a very interesting play. We're now probing that major resistance level that we talked about. We started to shift the focus there lower last week, and I think justifiably so. We started this week saying, hey, guys, we're right at that slope confluence. If this is going to break, look for Friday's low to give us the open. A break below 62.56 was our near-term bullish inval. then looking for 61 and re-entry on the long side into 60 if we were to get a drawdown that deep. Because again, this is all within the confines of uptrend resistance on three different levels, three different scales, whatever time frame you're looking at. Whether it's the daily chart, we had the median line right there. Closer in, just the advance from here, this near-term channel, median line resistance there. The 100% extension of the advance there, and also even within the confines of the embedded slope, another channel just from the lows that we made on the 14th of December. That resistance was also there. So all I have to say is, it didn't validate the break, but we're still at that same key region again right now as resistance. Now, if this breaks through, I don't know how to play it from a trading standpoint even on the intraday, because you're dealing with a couple of slopes just higher. So I could see this kind of spiking higher into this region. Sure, there's no play. There's no play to try to buy this on a break of the yearly opening range highs, the yearly highs resistance. You'd have to wait again for some sort of corrective pullback. If you're holding any long exposure, for sure, I'd still be taking something off the table here. Okay, you're just at uptrend resistance. So resistance is resistance, and it played off pretty hard last week. It's 3 waves down, so it still looks pretty decent. But until you get a daily close above 64.78, until you clear some of these horizontal regions, or slope regions of resistance, I'd be cautious. Now, objectively, a close above, just to put things in consideration, next top side target 67.14. And bullish invalidation still is going to be at 62.56. So play within that inside that region. Again, noting that we are right back at near-term resistance, 64.78. All right, and that's crude prices, guys. That's everything that I had on my list. So let me jump into some of your questions. SPX, Pete, as you know, I don't really follow on an intraday basis. I don't intraday trade this. I used to when we were trading managed accounts. I used to be very heavy on those, but not as of late. So here's what the SPX looks like now. Yeah, I think Jamie was looking at something very similar, and he noted something yesterday too. I think, this is at 38 to 50 slope. Yeah, I mean, you have a little bit more room to the upside for even the 50, but just looking at this on a daily chart, objectively, Pete, this is, covers the span of 3 years now, trading within this slope. So what you're seeing represented here, by the way, is the 50 and the 38.2 lines of this range. The 38.2 is the one that we were actually paying a little bit more attention to because you had really nice pivots here, resistance, break, saw it as support, and was very clear resistance all throughout last year. Once we broke through it last year, that's when you saw the accelerated move into the open of this year. The median line, was just not even a day's worth of hesitation before breaking higher. So look, you're way in overbought condition, not something you want to fight. You're coming into slope range resistance, I would call this, but there's really nothing eminent to do here. So for a trader like me, I need more back and forth action. I just don't, I'm very tight on risk management. So for me, I need a decent pullback, a decent dribble, and maybe a little bit of a hold sideways pattern before to move higher to get into these larger swing trades. But on the risk asset here, specifically SPX, you had like 3 down days the entire year so far, and it's the 24th of January. So Pete, I'm not sure what exactly what color I can personally add to this. Remember, Jamie has the midweek strategy webinar at 11 o'clock. So I think a little bit more appropriate question to press him on. For me, from the intraday standpoint, there's nothing to do here. There's just nothing to do here. Even on this move here, I start to think, okay, maybe there's a decent slope break for a pullback into here to get long. No chance. No chance. So intraday, yeah, maybe a spike into like 28.70s. I still wouldn't put it past this thing. I know it's a big jump from where we are right now. Yeah, other than that, I mean, this is just some basic slopes I've been covering. right? Here's resistance, 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 probe through failure, break, saw it as support, continued favor the upside. Again, the break of an ascending median line formation higher, or an ascending channel formation higher. Here's the upslope for the near term. Looks like you're getting divergence. Looks like it's getting tired. I wouldn't want to play the pullback. I'd look for the pullback to give me entry. But even that, I mean, this region is where I'd be interested in pullback play for the long side now, 2790s. But even that just seems far-fetched. You know what I mean, Pete? These markets are just moving. It's a pretty something you just don't want to fight yet. Something you just don't want to fight yet. I could see some sort of corrective pullback here just based on the momentum profile, still showing some divergence on these last couple of highs. Since the start of the year, we've been marking divergence in actuality. Look at that high in momentum, right? We haven't made a new high in momentum since the start of the year on the 7th, but price actions continue to break and close daily at newer, higher highs. So yeah, you could see a scenario that even if we were to break, this slope, maybe a little bit more conviction like this to the downside, something like this. Pete, even if you get a break like this, not too much room. It's 26-point drop, decent drop, but that still gives you 28 as support. And that would be same sort of reflection that we saw here on the breach of the upslope of this channel. We broke higher, tested as support, right? So not all realm of possibility that we fail near this median line pullback. But even such a scenario, markets might go nuts that it would decline like this, but that would still put you in the confines of upslope support. So no need to fight this just yet. No needs to fight this just yet. He says, thanks. Hey, you're more than welcome, Pete. I wish I had a little bit more color for you on that, but definitely something I would bring up at the midweek strategy webinar. I think Jamie's been tracking this much closer. Only other thing I didn't get to yesterday, I'm not sure how long I get to cover it, but I wanted just to talk about really quick the Bitcoin trade. Here's the rebound, looking for support or resistance rather into this region here. That's like 11,600 into 11,900. So a 300 pip range here, $300 range, of which you'd start to look for a little bit more prominent resistance if we're still going to move lower in Bitcoin, which again, based on our estimates, this is the log. Always want to look at this in log formation, but again, taking into account the percentage move as opposed to arithmetic. So look, the ideal scenario for the breakdown was for a move lower into 8,728, 8,644. That's sort of the region of which I'd be looking for a little bit more stringent support. So even if we get a little bit more on the upslope here, looking for resistance there in Bitcoin at that region. If we were to break 1374, that puts me just straight back on the bullish side again. That's a pretty big region. So just some objective targets there for some of you who may be messing around in Bitcoin. On the downside, immediate targets 93 and, like I said, 86, 9,300, 8,640, 8,006. Daily chart shows 8,640 into 8,730 right here. Whoops. All right. If there are no other questions, we will go ahead and wrap it up here. Like I said, midweek strategy webinar will be up in just a little bit here with Jamie, so keep in mind that. I will see you guys tomorrow. We do have the ECB on tap, so we'll be looking for some of that commentary. It's expected to be dovish, but as far as monetary policy stands, there isn't expected to be much of a move. So just keep that in mind on the euro, specifically as we're pushing through into fresh highs here. The ECB is still on tap. So there's 123.76. We got that clip. Again, that slope comes in about 124.30 on the upside if you push higher from here. All right, guys. See you tomorrow. Best luck trading. Cheers.